Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Robert Kientz from GoldSilverPros. Rob, thank you so much for joining us today.
Thanks for having me back on, Elijah. I appreciate it.
Well, it's great to have you live today. We are seeing an interesting, definitely a very interesting couple of weeks in the precious metal markets. Silver is shooting above $25 as we speak. Your perspective on what's happening. I know you've also done a lot of analysis of what the most recent COT report has been showing. Can you share all this with our viewers?
Yeah, I made the call a few weeks ago, right, really before June 22nd, as we're getting close to summer, and I wrote this and also did video. I don't think that gold and silver are going to fade as much this summer as is the typical pattern. Certainly there are exceptions to the rule. 2020, the pandemic, gold hits a new all-time high. You know, times during the summer where we have financial stress or some worries in the world, people will gravitate towards gold in the summer. But in a typical year, you don't see gold and silver do particularly well because the financial markets slow down in the summer. People are parking their money, in their 401k accounts and going out and enjoying the lakes and the beaches. This summer, however, has been different, just like I predicted. We've had a nice little mini pop in gold and silver. But what was really interesting this week, Elijah, is we got back to prices a month ago before summer started. And typically in the early summer, that's not the case. The early to midsummer is where you'll see a pretty big fade. And then you'll start to see that price rise up a little bit as the financial markets start gearing up for the fall, and they'll take their positions in futures and start moving, positions around, and you'll see them start to take positions for the fall. But Elijah, I'm looking at the COT report. I think they're taking positions for the fall right now. Last COT report, the one that went through July 3rd, had big changes in the bullion bank's position in silver and in the managed money's position in gold. I wrote that managed money, which are the big financial houses and, everybody that, if you store your money in 401k, these are the type of people that manage your money. They were taking big gold positions while the bullion banks were taking big silver positions, sort of hinting at where the market may be. The financial types may be looking more at gold for perceived weakness in the economy, maybe a recession, maybe the coming rate hikes by Powell and the Fed, which made a lot of sense. That's typical, although we saw it earlier than I would have expected, maybe a couple of months. And I think it's just the timing of what everybody thinks the Fed's going to do and the timing of what people think the markets are going to do. It seems as though people are making their bets a little bit early. The last COT report through July 3rd had the bullion banks going long silver to almost an even position. They bought quite a bit. Now, fast forward to the current COT report, goes through July 11th. These are always printed in arrears. So the trading happens. CFTC gets all the trader reporting data, puts a report together. It takes a few days. So this is through July 11th. So it's about a week old, but it's interesting because the other reportables category are the ones that are standing out now. Last COT report last week, you had the bullion banks taking a position in silver long, and you had the big financial houses taking a position in gold long. Well, this week, the swap dealers and the managed money, the bullion banks and the financial houses are kind of like, they're moving stuff around, but not any huge positions. But what's really standing out on this COT report as I'm looking at it is the other reportables category. And other reportables as defined, by CME Group and everything I've seen written on it are wealthy individuals, family offices. They may not be big organizations, but they have enough wealth to participate in the futures market. And they added an astounding 6,199 long contracts in silver. That's 6,199 contracts of 5,000 ounce silver. They basically added 50% to their position. They're now at 19,783. So before that, they must have been, it looks like, at about 13,500. So they added almost 50% to their position in a week. So obviously, well-to-do individuals, family offices, small businesses are banking on silver going up. And I don't know where they're getting the data, but it's like all at once. And that's the funny, and I'll get to gold here in a second on this COT report, but that's the funny thing, Elijah, the movements in the COT report are all like you have an entire group swimming together or rowing together, and they're taking big positions at once. The last two COT reports have shown all the players taking big moves into gold or silver. So they're already setting up for what I think they think is going to be an explosive market in the fall. That's what I'm predicting. Now we'll have to see what actually happens, but it's a little bit odd to see in the summer. Typically when open interest will fall, This past week, open interest rose. The total amount of open contracts rose in both gold and silver. Now, getting to gold, the other reportables went long 4,088 contracts. That's a much smaller move. They have 116,000 now. So percentage-wise, the move in gold was less strong, but it's still a bold move for 1 week. And it goes to show that individuals are moving in precious metals. If you have a family office and you're looking at potential banking issues, if you have a small business and you're looking at liquidity issues and how are you going to keep your business afloat if your bank account goes bad or something happens with the dollar, which is all over the news for the last 3 to 4 months, these people are taking positions in the metals. And the funny thing is they're doing it on the futures market, which I find to be very interesting, probably also doing it in physical, although this report doesn't have that. So overall, it's just different than I would expect it to see this summer, but it does edify my early call. We have so far, knock on wood in case something changes, gold and silver have held up during the summer when they typically don't. And I think that's on fears of what happened in the banking system earlier this spring. I was on your program with your dad talking about it, and we were talking about, Silvergate, and we were talking about Credit Suisse and SVB and all these banks, Silicon Valley Bank, and all these banks that were having trouble. And I think we had the second, third, and maybe fourth largest bank failures in history, during the spring. And I think that woke people up. And on the heels of that, the mainstream media seems to be finally 4 or 5 years later than the alternative media, grasping the story of potential dollar fall, meaning this may be the end of the dollar as the world reserve currency. It's been out front on CNBC, Fox, most of the mainstream channels, Bloomberg are all sort of hinting at it. And I think now this is a realization by financial houses, wealthy individuals, people that really are into the money side of things, that the precious metals have value, that other things they may have invested in may be long in the tooth and may be retracing or full on going into a bear market. And more than anything, underlying all of that is the economy itself. And I think this is a vote of no confidence in the US economy, that we're probably headed toward a recession. The moves are so strong so early in the summer. Now they could reverse. I mean, you never know. Markets are fickle. People could say, oh, what are we doing? Everything's fine, and change that. But typically you don't when the moves are this big. And typically that's people taking positions. And given the macro outlook, given some of the fundamentals in the economy, given the mainstream media now doubting it, and countries coming out talking about getting rid of the dollar. I mean, this is all in mainstream media over and over. I think people have started to wake up. Now, it's not the general people that are waking up. It's the big financial interests are waking up because that's their business. But I think in the fall, Elijah, it's likely as we get a nice boost in gold, silver, which I suspect will happen, that the retail traders will start paying attention, and they're going to come back in a big way. Now, they're not going to go to the COT market, the COMEX market, and appear on the COT report buying, these big industrial contracts. They're going to go buy the physical probably, or they're going to buy an ETF. And so what I'm going to look for, probably starting about mid-August leading into September, as school season gets close and people, get back and off from their summer vacations, I'm going to see, what's going on in the ETFs. I'm going to see, what is going on with the paper trade and the paper market and the physical market, because I think that's going to tell us whether we're going to have a blowout year. And I'll say one more thing. As you look at the positioning for December in both gold and silver, you're already starting in December is the last big delivery month of the year, and both gold and silver usually have substantial deliveries in December because it's the last of the year. And if people are taking physical positions to do it for tax reasons or do it for liquidity reasons, they'll do it in December. And I'm already starting to see that positioning for December. And we're only in July. We're a good 5 months before December really becomes relevant. But in the futures market, it's relevant right now.
I think it is relevant right now. We have a viewer question about the bank's positions in precious metals. You can see a little bit about this with respect to the COT report. Could you remind our viewers of that, maybe those who are just joining in right now, what the bank's positions right now and how they've changed in both gold and silver?
Yeah, they went long silver the last couple of weeks to the point that they're almost even. And to understand this market, if you don't, it's not a physical market. So you kind of got to get the physical product out of your head. Now, there can be deliveries, but most of the trade's paper. So just think about it this way. You're in the futures market guessing what gold and silver are going to be in the next 3 months. Why would you do that? Well, if you're a producer, you're producing it. If the price falls, you have downside price risk. So the derivative markets become a hedge, a piece of insurance for you. You can take a short contract. If the price falls, you get money because you took a short position. It offsets your loss in the commodity. If you're a merchant, you have upside price risk because let's say you're Apple and all of a sudden silver goes from $20 to $25 an ounce, making iPhones got more expensive. So you may want to take a long contract to hedge upside price risk because upside price costs you more because it's an input. And those are the typically legitimate hedging positions. The bullion banks can do some hedging. They do for clients, but a lot of it's speculative trading. The bullion banks are like the big banks, the Bank of America, JP Morgan, those types. And then you have other categories. You have the financial houses and you have the other reportables. And essentially what you're seeing is what I consider the smartest, the sharps, the bullion banks, because they have access to the data. They trade these markets professionally. They hire smart kids out of school and develop them, and they trade these markets. They're going long in both gold and silver, and it's very clear in the positioning. Now they're creeping in, but as to not make the market aware. But I see them, going long. Producer merchants are going to hedge. They're going to do what they do no matter what because it's their business. But the financial houses have started getting into gold and silver, and usually they don't do that this early unless they have concerns. So that positioning really indicates that people, are moving their money around, but a lot of people are participating now, in gold and silver in those futures markets.
Now we have a few viewers' questions regarding the announcement. It was on Russia Today. It was kind of a pre-announcement of the announcement that the BRICS countries are looking to develop a gold-backed currency. There's a lot of skepticism out there about will it actually be gold-backed? And what significance it really has. Your perspective on that and the impact that it'll have, because I know you mentioned earlier that it may be that the dollar's status as the world reserve currency is going away.
And there's a whole lot to talk about here. I'll try to summarize because I know we talked about some of this before. This is a very complex, but typically when you start to have geopolitical issues, it usually starts with a financial or a trade issue. In this case, the trading networks have been rearranging for the last 5 years, or actually 10 years. China really 10 to 20 years ago started what is now the Belt and Road Initiative. And what they're trying to do is link together networks of commodities and supplies that are not dependent upon dollar trade so that they can secure their supplies going forward because of very long-term thinking. Russia, as a result of Ukraine-Russia, had sanctions on it. And so what happened there was they needed to control the price of the ruble. The ruble would have crashed had they not gotten off the petrodollar standard. In other words, the Americans basically pushed the Russians off the petrodollar, and that was great for the Russians. Here's why. They said, okay, fine. Anybody who wants to buy our oil, and by the way, Russia produces so much oil that I don't care if you sanction it, nobody can replace that oil production, so people have to buy it or the world's going to stop. So sanctions, be darned, Russians are going to produce oil and people are going to buy it. They have no choice. Entire countries don't want to go bankrupt because they don't have access to oil. So people bought Russian oil and they said, buy it in rubles. Well, that drove the ruble up. Well, what did Russia have to do? They didn't want it to hyperinflate or go too high because Russia also trades and it would affect their current account balance and it would affect all these things. And current account balance is just a measure of goods in versus goods out. They have to keep that in balance. You got to keep that in balance. You don't want your economy, to go too far, too fast one way or the other. It creates problems, creates supply chain problems and others. So they capped it to gold. So as people bought Russian oil and it drove up the ruble, it made the ruble more valuable. They just went and bought gold with it. So the Russians are stockpiling gold through the oil trade. And so, I think it dawned on China, wait a minute, we can do that. Why don't we all get together and create a common currency? We're all trading with each other in Belt and Road Initiative anyway, and stick gold in there. And all of a sudden you have a new gold-backed currency. But China's also very big on smart contracts. They were the first to tokenize their assets. They tokenized tea a few years ago and said, here's a tea token. You want to trade it, and it's linked to a smart contract. Everything's electronic. It's very quick. It crosses jurisdictional boundaries very easily. It solves a lot of legal issues. It facilitates faster trades, more efficient, cheaper. And so China really pioneered that movement. And so it does not surprise me at all, because China also has pioneered the CBDCs. They're out ahead of everybody, that they're taking everything digital and that they're putting trade digital, and that they're going to do a gold-backed digital currency with Russia, one of the main allies and trading partners, and the rest of the Belt and Road Initiative. You got Brazil, you've got India, South America, and a lot of other countries in there. South Africa and a lot of South American countries are in that as well. It's not just Brazil. So it does not surprise me at all. And this has been creeping. There have been hints that they're going to do this. I actually saw the potential for this talked about by Hugo Salinas Price, who's a billionaire from Mexico and very popular on the talk market, talking about the economy. Everybody knows him. He predicted this probably a year and a half, 2 years ago. And then we started seeing news reports that Russia and China were working on something outside the petrodollar. And so it does not surprise me at all. China's a leader in digital. When you form a new trade union, you have to have a currency that facilitates that trade. Because what is currency? It's the unit of account for what? Trade, okay? So after you adjust your trade networks, you got to build currency networks. And that's what they've done. They built a currency network. It's common. It makes sense. I 100% believe that they're probably going that route. And they don't even have to go digital if they want. They could just create a common area currency. But I think since we're headed into the era of digital currencies, the writing's on the wall. The paper era is just about over. You may see some paper currency spattered here or there, but all the big trading nations, one, they're going to CBDCs, they're going to smart contracts, they're going to electronic forms of trade and settlement. That era is here. And that era is here because of the internet. It's a natural offshoot of making business more efficient and trade more efficient because of the internet. Blockchain came about because what? The internet. So all of that makes perfect sense when you look at what any well-studied technology person would say about the advancement of technology into the financial space. All of this has been predicted for a very long time in general sense that we are all going to go digital currency. It doesn't surprise me at all. Now, people have been using fiat currencies for a long time, and maybe the older generations for their whole life, this may be a little bit of a shock to them. The younger generations where everything is digital, I mean, think about it, we have streaming movies now. I remember growing up working at Blockbuster Video, and you rented a video and you had a VCR. But that's not the day and age now. Everything is streamed. And people don't even go to movies anymore. I live really close to a movie theater. I walk over there, and sometimes if I want to watch a movie, it's me and my friend, and we're the only ones in the theater, right? Or my kids or whatever who I'm taking. People aren't going to the movies anymore. They're streaming. So everything's going digital. And that, it doesn't surprise me at all. But I think it's going to have really big repercussions on the global markets because the Americans, the English, and a lot of Europe is not caught up. And it gives an advantage to those who are implementing digital strategies right now. And every day, I get a summary digest from the BIS and the Fed on what's going on. And they're constantly talking about developing CBDCs. They're constantly talking about how to implement that in the banking system. I've seen chatter about a constitutional amendment to allow for America to have a CBDC. We've had Governor DeSantis in Florida, and that legislature passed a law that says Florida will not recognize it. So you see a states' rights issue coming up. So there's an oncoming battle with the American CBDC where I think it's going to be a states and a people's rights issue against the federal government. So all of this stuff is going on right now, and honestly, none of it surprises me.
Now, I know at the top of this interview, we were going over the COT report that you've analyzed, and you said that a lot of wealthy investors are moving into precious metals just recently, kind of all of a sudden. Do you think this has anything to do with the BRICS, Russia announcing that the BRICS will announce a gold-backed currency? And also, do you think when it is implemented, will that have any impact on the precious metal prices?
100%, maybe 1,000%. Yes, with digital currencies and with Basel requirements in the Western system for gold being a high quality liquid asset, with China and Russia buying so much gold, with the central banks being net buyers of gold since 2011, gold is at the center. No, what has been at the center of every financial and currency reset for 5,000 years? It's been gold, 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 gold. And in 2023, that has not changed. It's not Bitcoin, and I'm not slamming Bitcoin. It's just not. Okay, they're not going to another fiat currency. They're using gold for the reset. It is the measuring stick. Gold will be the measuring stick for all currencies going forward. And if you're going to do an asset-backed, whether a sovereign digital currency or a private, because you have those two out in the marketplace, if you're individual, you're going to do it to gold, and you're going to link it to the blockchain. And there are so many instances going on both in the public and private sphere. It's not surprising at all. And everybody's doing the same thing. Of course, you have some doing to silver, but the majority are really focusing on gold. And of course, it's going to be that way. I mean, that's just the way that it is.
You mentioned how in the future, kind of all transactions will be based on gold most fundamentally, and everything will be valued with respect to gold. Right now, it's the US dollar. So that seems to be a huge change and a really shift we're going to be seeing in the near future.
Yeah. So if you go back to like Bretton Woods and after World War II, the dollar was the de facto reserve currency in a way. It was certainly a dominant one. And then it rose with, the great American engine in the 50s and 60s to being, just utilized everywhere. Of course, we did the petrodollar deals with Saudi Arabia and the Middle East, and all of those steps, a decade or so in after World War II really cemented the dollar. We ran into trouble in 1971. We had to take it off the gold standard because we had printed too many in Europe, and especially France were taking our gold. And yeah, we went to pure fiat, and we see what happens to pure fiat. It crashes. There's no surprise the world's going back to gold. Every single time in history, we've had a war, an economic dislocation, a sovereign country coming under severe stress, in which that is a major nation state across the world with a lot of influence. We go to gold. Every single time we go to gold. And so gold is going to be at the center of it. I also think silver, to a lesser extent, maybe not as much at the central bank level. They're not looking at silver that way. But I think if you're an individual out there or you're a small business, you're looking at silver. Silver is a little bit cheaper price point. More people can afford it. And when you add that kind of demand to silver on top of the industrial demand for silver, which are already running about 200 million ounces short this year, and I think it was 160 last year, we're already running short just for industrial purposes. And when people pile into silver for monetary purposes, I think it's really going to spike the price. And I think silver is going to go up more than gold when it's sort of all said and done. And I think this is going to play out over the next 2 to 3 to 4 years. As we get within the last couple of years of the decade, I've seen analysts reporting that like by 2030, most countries will have their CBDC in place. So you may have to 6 to 7 years before the world's on digital. So if you want to go get your gold and silver, probably now's the time. But certainly going back to those big players on the market, they're getting in, because if you look at the way the world's going and the way the world leaders are talking, they're going to CBDCs. Some of these will be asset backed, but gold will be part of the reset in the system and its financial stability. And that's where people are moving. So everybody's talking about CBDCs, but behind the scenes, they're backing it up with gold and they're backing up with commodities. And when the world gets in trouble, what do? They go back to commodities because they're real fungible things that you can touch and it have value. They took labor to get out of the ground. They have value over time. They don't hyperinflate. So when you're dealing with financial problems, you go to what has worked. And that's why we're going there.
One of the things I did want to ask you about when it comes to the world kind of going back to gold is that right now, so few people even understand the value of gold. What do we need to do? Because there's going to be this seismic shift. It seems like you're saying that countries will now be valuing things in gold. And it seems like there's going to be, I guess, an education of just the common man, what gold is, how it's valued and everything like that, what gold is valued right now. How do people prepare for that? And what are some steps that they can take right now? Because I'm sure there's going to be pushback as well by the U.S. government because it's the easiest thing, right, to be able to print money and to just inflate your currency to pay for expenses. But gold is a way that really it protects the common people from having their wealth being inflated away by the government. And the government obviously doesn't like that. So there's going to be a lot of pushback in the media, probably by the government as well. How do people kind of prepare for this kind of great awakening that's going to be happening? Kind of, I guess, taking a phrase from Andy Schectman, the Great Awakening there, but your perspective on that.
Yeah. So if you look at officialdom, like government leaders, banking leaders, financial leaders, they're all talking about extending the current system and doing a different model, going from fiat to CBDCs, which is another type of fiat, because it perpetuates the existing power system. They, of course, don't always power. They've been raised in that system. It is their life. It's their identity. The central banks are faced with losing their identity. They don't want to lose it. So what they're doing is developing another system that they think they can carry it forward. And now the system's kind of being rushed out a little bit. And there's some things that they haven't really thought about. And that's what, why I signed up the mailing list. I get a lot of chatter. And when you read those stories, you figure out what they're worried about. They're worried about getting it out in time, Elijah. They're worried about getting it out in the Western world. We're behind. And so the Fed is really worried. The government is worried. That's why you see what I would call a lot of propaganda in the media about calming people down with regards to the banking system stuff. Because if we had a big crash right now, like a Lehman style crash, our next monetary system isn't quite up to par. And then the people would go to gold, because what else is there? I think from the perspective of the people, you want to go to things that have a history, that you trust, that you feel are going to protect your rights, and are going to give you the ability to maintain at least some of your lifestyle. Certainly the ability to get, emergency services, key services like food and water. But beyond that, people they don't want to give up their lifestyle. And I think the people turn more to gold. I don't think the people are trusting CBDCs. In fact, the people don't even trust a lot of the legitimate gold-backed private asset-backed digital currencies, which I get, because it has a digital component. And I think what's going to happen is people are going to go strongly into gold. And I've said this before, Andy Schechtman is right with the Great Awakening. Yeah, I kind of called it the quickening, and where so much stuff happens that you're in one of two camps. Either you've got so much cognitive dissonance that you stand around wondering what happened, or you acted before something happened. You took control of your situation and you did something ahead of time. And I think the smart money, if you look at the COT report, for example, going back to the other reportable category, that's wealthy individuals saying it's time to go to gold and silver. And Elijah, I don't think they're coming out. I think they're going to stay there this time. I think that people see the writing on the wall. And if you're waiting a year to 2 to 3 years from now, premiums are going to go up on all products. Stuff is going to become less scarce. One of the things I like to quote all the time is we're already in the silver cliff. We're already behind on mineable ounces for what we're using every day. And we haven't even had the people around the world, 8 billion of us, buy an ounce of silver each for financial security. If they did, silver would go vertical price straight up, and they would stop all the markets, and it would be chaos in that market. And all it would take is 1 ounce in fact, 1 ounce per person in the US would cause all sorts of problems. Gold, wow. The gold price, when they do the reset, is going to be whatever they need to do to clean out all the junk. And what is all the junk? All the junk is all the bad debt, consumer debt, national debt, corporate debt. It's the derivatives complex. When those things, it's a big fugazi. It's a sort of Ponzi. A lot of that value is just numbers on paper. It's not real. And when that system comes down, gold goes up. Think of it like a balance or a seesaw. If you've got a quadrillion derivatives that has to go down, and your safe asset is defined by the BIS, China, Russia, all these people are defining gold as your safe asset in the banking system, these new currencies, gold's got to go up commensurate. And that's why gold is going to launch. Now, what is gold going to be? You've heard price targets of 6,000, 10,000, 20,000. Nobody really knows. It depends upon how much debt is allowed to be destroyed versus how much just crashes, and it's how the authorities handle the system. I don't have a ton of confidence in authorities, only because I think they're turning a blind eye and trying to perpetuate the system of the CBDCs. So what I always say is, I think you're in a spot right now, a particular spot in both American and world history, which happens every once in a while, and which you probably don't want to listen to your government in terms of financial matters, and you probably want to start doing your own research, because this, I think, is going to be a seminal change in world finance. It's going to be a seminal change in trade networks. It's going to be a seminal change in world powers. It's going to be a seminal change in currencies, availability of goods, quality of living in different countries. And gold solves a lot of those problems. In fact, it's the only thing that consistently throughout history has solved those problems. So I'm going to say what I always say, and people are going to say, well, you're a gold silver guy, we expect it. But I'm a gold silver guy because of what I see. And I believe gold and silver are going to do very well. And I think this summer, them holding up when they typically would have faded is a sign that we're in that early stage of the last leg of this big gold market, which I think is going to end in a blow off top a few years from now at the end of all this financial calamity. And they're going to use that gold to reset the system. So if $2,000 is the new standard price of gold right now, or $1,950, the range we've been in for a while, it may be 5, 6, 7 in today's dollar terms. Now that means the dollar has lost all that value, but at least you had gold to offset that loss and probably made some nice gains as well. Because not only is gold going to be used to reset the currencies, but I think there's a lot of pent up value in gold that has not been demonstrated in market prices due to how the markets trade, in which you're going to see gold price increase because it should have probably been 3,000 to 4,000 right now, given the situation. So a lot of that gold value is going to come rushing forward very, very quickly. Now you want to be in position with your gold and silver before that happens, because man, if you wait until that starts, when people start noticing gold and silver, the whole world, I don't care how much the mainstream media looks down on and talks down about gold and silver investment right now. I guarantee you, when the world starts melting down, the financial markets start melting down, and you have another Lehman, but it's going on all over the place. Those guys that have talked bad about gold are going to be the first to buy it because they know. And the reason they talk bad about it is because they don't want that to occur. It's not gold itself. It's what that represents. They don't want the end of the new system. Either they're vested in it or it would ruin them and they're not prepared. But those guys will be the first. When they think it's all going down, they're going to gold and silver. So a lot of people that scream the most about the metals are going to be the first in when you start seeing big financial problems. So if you're out there, you don't want to wait till those guys pile in, because you're talking big financial houses, big wealthy individuals. They're going to be buying it in bulk. Think about all the people right now, Elijah, that can afford 20 ounces of silver a month or a couple ounces of gold a year. How's the price going to change in a market in which silver's already in a supply cliff, gold's going one into a few years, and you have the big money come in? Okay, you're going to see price movements that you don't think are possible because you've amplified the amount of physical demand by a factor of 10, 100, 1,000 at one time. Because when the people that are going to suffer the most are facing destruction, they're all going to buy gold and silver. And if you don't have it, you ain't getting it, because not only is the price going to decide you may not be able to afford it, but supplies are going to be tight for a very long time because you have so much stock available, but the mines have not been investing for the last 7 to 10 years. So there isn't supply coming the next 5 to 10 years that we're used to. So it's not just that the demand side is going to increase, is that the supply side necessarily has to decrease because you haven't done the exploration. We don't know where it is. And even if you know there's a big pile in the ground, it takes 5 to 7 years to develop that mine and maybe a couple $100 million in CapEx. And where are you going to get that when the world markets are exploding? So there's going to be a period of time in which gold and silver are relatively unobtainium because both there's so much demand, the price is up, but also the supply is cratering. And the ounces we have in the ground for the next generation of investors is not there. And you cannot replace that overnight. It is literally impossible. Mother Nature is not going to let you go find another 100 million ounces of gold in the next 2 to 3 months or the next 2 to 3 years. It doesn't work that way. It's a lot harder to get it, and that's why it has the value that it has.
And obviously we can't give financial advice, but just a little bit of a testimony, from a bullion dealer myself. We have been seeing, if probably the slowest month or one of the slowest months this year, and premiums are just going way down right now. I mean, talk about it being important to get in before the rest of the crowd does. I mean, right now seems to be a fantastic opportunity, at least if you look at the premiums and also just availability of product on the retail side. It's nothing like we saw back in March and April when we saw those bank failures and people wanting to get into the metal. Premiums shot up at that point. Right now, they're significantly lower than we've really seen in a long time.
Yeah, what happened was I think people took a position. The banking system didn't crash. People kind of got, okay, we're okay. Regular people, but the wealthy financial houses and people are seeing the writing on the wall. They're taking positions. When the public comes back in the fall, they're going to pile right back in. In a month, we'll be talking record sales in gold and silver, or at least building up that. You'll see the momentum. And maybe the records in October, November, when you have a lot of seasonal demand, plus you have all this pent-up demand from people coming back, looking at everybody else buying gold and silver, and the price stayed up, and they're like, what happened? Oh, the big guys in the derivative markets bid gold up. It's sitting at 2,000. What? It goes down to 1,600. What? It's not going 1,600. Oh, crap. I better go buy some. And boom, rush, retail rush. And the reason you're not seeing as much retail sales now is because gold and silver are up. And I will tell you right now, most people are desperate. The job situation is not good. Inflation has been raging. Things have gotten really expensive. And I think people are selling a little off. So you're seeing more sell into the market, which is normal. when you have an abnormally high price, and I say it's abnormally high when you talk about seasonality, people are going to take advantage. They're going to dump some. But if you look at the stocks on COMEX, if you look at the stocks in the ETFs, Elijah, this is a baby move. This is a tiny baby 100th of 1% move over the physical that's come off the market the last 2 years. So yes, we have some redemptions, and yes, some retail sales are a little weak right now. That is a very short-term phenomenon. Very short. The data is clear on that. And I think when this market starts to go in the fall, if it goes like I think it could, if we, I'm looking at earnings reports, and let's talk about that for a minute, something we talked about before the show. Another macroeconomic factor, FactSet and Yahoo Finance are coming out with these wonderful earnings trackers. And it's astounding. 80% of S&P, or I'm sorry, of companies had a nice positive earnings surprise. The other 20 didn't. And the other 20 are so bad that they're pulled the entire S&P 500 negative. So in other words, most companies are doing sort of kind of okay. Most of the world ain't doing so hot. Energy plunged almost 50%. Earnings plunged 50% in a quarter. 50. Materials, 1/3 drop. Healthcare, 17%. S&P 500, 7. With only 20% of S&P 500 companies not having a positive earning beat, it still drug the other 80% down, negative 17%. What happens when it's only 70% of companies, 60% of companies positive? The S&P is going to crash. And what happens to the stock market when earnings go down? I expect the stock market to have problems in the fall. So earnings reports are not great. And that's yet another macroeconomic factor we have to pay attention to. So as you look at the underlying data, you look at both the physical and the derivative trade, it's clear this is not a normal summer. It's clear the big positioning and the big, derivative markets are being taken by the big guys. And I think when the retail crowd comes back in the fall, they're going to pile in like nobody's business.
Fantastic. Well, Rob, thank you so much for your time today. We really appreciate you joining us today, especially live at this late night hour. I would really encourage all our viewers who are watching right now to check out your YouTube channel, Gold Silver Pros. Can you tell us a bit about that and where else people can find you?
Yes, we are on YouTube and Twitter, our two main channels. You can find us, just look for Gold Silver Pros. You'll find us. Make sure on Twitter we have the blue check mark, by the way. We're the only validated Gold Silver Pros. There are imitators. They don't do as good a job as us. We're also on other social media. We do a little bit of TikTok, a little bit of Instagram, so you can find us there. And generally, just look for us on the internet. You'll find us, or goldsilverpros.com. And I wanted to say one thing. Your channel is so wonderful. I followed it for years. You guys have a lot of great information. So by all means, if you're on this channel, stay on this channel, watch the content. It's absolutely fantastic. It goes beyond gold and silver. It talks about all the different things that have to do with both liberty and finance. It's a great channel. And instead of watching YouTube TV or Netflix, this should be your destination channel, and channels like it in the space. Certainly, there are a lot of good commentators in the space you should follow. But I would say, guys, if you want to educate yourself, turn off the boob tube for a minute, or the idiot box, or whatever you want to call it, the TV, and go educate yourself. This is a great channel, and there are others like it. And just look at the guests that you and your dad and your group has on, and go follow those guests as well. And then you're going to have more knowledge, and you know what to do with, and that's going to help prepare you. And that's the key. Being prepared is the key to surviving big transitions like this. You can go through the pain, but why would you? Just take a few extra moments to educate and prepare yourself, and you're going to be just fine.
Fantastic. Rob, once again, thank you so much for your time, and God bless.
Thank you so much, Elijah. It was my pleasure.